So it was really fascinating, right? We saw this 27-year trend of moving toward more services. It just get totally interrupted, and then just toward the middle of last year, we saw the consumer really start to recalibrate its spending and think about that. Buying too much stuff, as you just mentioned, and looking more toward the services. Now we've seen that rebound of that momentum of services really climb through the end of last year, and then Omicron happened and kind of provided a bit of a setback. But what we're seeing in the latest data is that setback looks to be fairly temporary. And things look back on track toward that services or that experience economy that we were in just a few years ago.
Well, we've certainly seen the reopening stocks even this week gaining some momentum. The restaurant names, Brinker had strong earnings this morning. That's kind of helping it move to the upside. So, if we talk about what that holds for the next couple of months, then where do you expect to see people spending the most?
What's really interesting is during the last holiday season, we saw shopping early, both in-store and online, and we're seeing that now. So we're seeing that continuation of strong e-commerce spend, as well as people shopping in-store. And that's showing up in restaurants, as people continue to order in, as well as showing up in the restaurants and getting back out there with friends and family. So those are very key trends that we're seeing happening today.
All right, so let's talk about the inflation implications, because it's a big deal. If you want to look at what happened on the supply chain side of things, you had a huge wave of demand overwhelming an area for goods that it was not used to that, and we've seen the supply chain problems and inflation as a result. So if that's receding, does that mean we can expect some easing on that front?
I think there's some good reasons to expect that impact to be positive or alleviate some of the pressure on inflation. Certainly, there were two factors driving inflation higher: the disruption at the ports and factories and everywhere else, both in terms of labor and just getting stuff. And then it was this excess demand. As that demand has started to cool off, that'll alleviate that front, and then workers start to go back to factories and ports and things like that, which we've already seen, again, providing pressure easing off. So both of those factors should help the inflation story and should help the overall consumer spending story quite well.
All right, you have some more sort of hyper-local data as well. So tell me where you see outperformance across the country and by what kinds of consumers.
So it's really fascinating. At the Mastercard Economics Institute, we're focused on that hypergranularity using our spending pulse data. We're seeing that across the country, where the southern parts of the country that are less impacted by the blizzard that happened also got a big benefit from some of the excess savings that has continued. We're seeing that as a relative outperformer. A lot of mobility, or people moving to the south, as well as some of those less populated states in the middle of the country. Those are the areas that we're seeing that momentum, and that really goes in line with the trends that we're seeing in overall mobility, as well as some of the restrictions and the spending patterns that we see.
So finally, for those who are wondering how much spending power the consumer is going to have this year, when the Fed's pulling back, fiscal stimulus is pulling back, it's not like you can look into people's bank accounts, but what does your data suggest?
That's right. So the way we're looking at that is, are we seeing consumers continue to spend in the face of these headwinds? As you mentioned, that $600 payment that came into people's bank accounts at the beginning of last year in January makes it really difficult for sectors to outperform relative to last year. But we're seeing some really strong numbers. Omicron that just happened, we're seeing strong numbers in the face of that. And of course, the latest disruptions on the weather front, we're continuing to see a lot of spending momentum. So we're looking and monitoring that very closely to see if consumers are responding to that new piece of information, or how much of a lag or impact we're seeing from that hangover of that big spending that happened at the end of last year.
In other words, you're not seeing a huge effect. It looks like people are pretty robust.
That's right. We're seeing that continuation of firm consumer spending, both in person and in store, in a lot of broad-based categories. People want to get back out there in that retail space. It's been very prominent, and also in the experiences economy.
Very interesting. Bricklin, thanks for joining us with all the details today. We appreciate it.